Coupang stock, or CPNG, went public today. Now, it is clearly an exceptional company. I'd even argue it's an unrivaled company, the type of company that has a value proposition that is so strong that it resonates so well with its end customer base that they take market share year after year, turning into a compounding machine and potentially an investment that rewards shareholders very well over a long period of time. Because at the end of the day, the channel you're watching is Unrivaled Investing, where we're focused on trying to find unrivaled companies where if you're unrivaled, it gives you the right to take market share year after year, and that gives you sort of a license to grow over time. Now, if you don't know why or what makes Coupang special, I just did a video about them, which I'll leave a link to below. That's sort of the overview of the business, overview of their ops. That's sort of the detail behind why they're unrivaled. That said, as investors, you do need to look at multiple factors when you're thinking about making an investment. When you think about partnering with a company over a multi-year time frame, you need to consider quality as well as valuation, because you can't just look at one variable and ignore this other key aspect, which is valuation. Because you can have a great company delivering fantastic results, but if you overpay for something or you pay too high of a price, it could hold down your returns for long periods of time. Now, this might be completely anathema to a lot of investors, or even speculators, where in an up market they're like, hey, valuations only go up. I can assure you, valuations don't always go up, and that is a little bit of the turbulence that people saw just in the last few weeks in the start of March 2021. So, and like a few other stocks that I've covered, Coupang has gotten that first day IPO, like, wow, this is fantastic. Now, part of that is because it's a rigged process. I've done a whole separate video on that, which I'll call out a little bit later. If part of it's the fear of missing out and the hype and the emotions and the animal spirits that get into it. But it makes, in my first video, I sort of called out, hey, based on the targeted price of around $34 a share, I thought it was pretty rich. Subsequently, the first day of trading, it's up over 40%. So a lot of folks are sort of wondering, like, did I miss something? I'm asking myself, did I miss something as I'm thinking about their valuation, as I'm thinking about this business model? And maybe I did miss something, and that's why I wanted to call out Carl, who's a Journey subscriber, and he said, hey, look, if you look at other e-commerce platforms like China's Pinduoduo, this e-commerce company has similar growth profile, but they trade at a teens price to sales multiple versus Coupang's valuation of only low single digits price to sales multiple. So, like, wouldn't that mean there's this huge opportunity? And so that's sort of the core question, one of the core questions in this video. I also want to talk about the dynamics of IPO stocks and sort of how I generally like to see how it plays out for a little bit, and I'll get into that in a little bit. In full disclosure, I do own stock in Pinduoduo. I'm up about 8x on my cost basis. So it's Carl's question is a smart and legitimate question, saying, hey, you see this company that's delivering, how come Coupang isn't at that same valuation, especially given that it's going to grow over time? So I'm going to get into why I think there's a valuation discount is warranted. I'll discuss more about the IPO dynamics, particularly that you investors, I'd argue, might expect in the weeks ahead with Coupang. But first, a quick plug, because Carl is one of my Unrivaled Investing Journey subscribers, and about that, what are you watching? You are watching Unrivaled Investing. This is a no-hype, mission-focused channel to try to find you exceptional companies and unrivaled investments. If you enjoy learning about potential multi-baggers, please make a point of subscribing. If you're already a subscriber, I do appreciate that thumbs up. And if you want to follow my personal journey to see what potential multi-baggers I'm buying, go to unrivaledinvesting.com, click on Journey. Now let's go into these follow-up questions on Coupang, because as I mentioned already, I already did the overview of Coupang with a detailed valuation. I refreshed the valuation based on the current share price. Now it's $49 or 40% higher. So now it's refreshed the valuation. Did I miss something? And let's talk about IPO dynamics. So first of all, as I've called out before, I think the IPO process is rigged. The direct listing offering is way better. I'd argue even though SPACs are generally very flawed and can present an asymmetric information perspective, it is also a better opportunity for retail investors in terms of thinking about companies that they can get access to versus this IPO process where, even though Coupang looked interesting at around mid 30s, it opens up way higher, opens up at like 60 and closes the day at $40. And so part of it's just, and I'll leave a link to this rigged IPO process video, but part of it's just that the bankers, because they're underwriting the deal, they want to create this, this asymmetric buy versus sell ratio of like 20 times the amount of buyers versus the shares that are going to get sold. So of course they're going to get this pop. And at the end of the day, the biggest loser from this process, in my opinion, isn't actually the retail investor. For the retail investor, it stinks. It's not fun to miss out on what you think is a great company just because the initial supply-demand dynamics resulted in the price that's just a little bit too far in terms of valuation. I think the biggest loser is actually the companies that went to the bankers to say, hey, I trust you, can you get me a good deal? And they didn't. And the example here is that Coupang could have gotten 40% more, at least 40% more, just based on today's price action in terms of the proceeds that they got from the company. And that's the reason why direct listing is so much more beneficial longer term when companies can issue capital via direct listing. And that's arguably also an advantage of a SPAC process where it's very straightforward. Hey, here's the cash up front. You know what the deal looks like. Whereas here, the company effectively missed out, and the bankers, pass along those proceeds to the funds that they're friends with, and they allocate those shares to. So that's the rig process. You can watch that full video for more thoughts. But recognize this isn't the first time I've covered a new company that's going public here in an IPO. I covered BigCommerce. I actually did two separate videos on BigCommerce. One was on their business model, and another was on the update on the valuation, very similar to what I'm doing now with Coupang, where with BigCommerce, I was like, is this a crazy valuation or what? The stock price seems like it's going up. And keep in mind, like, you do get aspects of an IPO of like fear of missing out. Like, could this be the next big thing? And sometimes you get these sort of marketing letters like, hey, this company could be the next Amazon. You get all pumped up for it. And, the reality is, you need to look at one company at a time, and most companies aren't the next Amazon. So here it is. A lot of people were thinking, hey, could this be the next Shopify? And so, does it warrant this, incredible valuation? A lot of hype going into the name. And, you get this supply demand imbalance as well, as there's lockup periods for what shares can actually start trading. So there's way more demand than supply. And so the price is going to be all chunky and sloppy and flying all over the place, ideally higher, so that the bankers can make sure they lock in their profits. So I published a post here on YouTube on BigCommerce where I was effectively saying, look, the initial price action of the IPO was kind of ridiculous, and it subsequently rallied, and I was like, this is just a crazy valuation. So that's, you could see my face over there. I thought it was ludicrous what ended up happening, and you could see that August 28th was right here, and I said it really wasn't that compelling. And since then, it's down about 55%. And I said, look, this risk reward doesn't make any sense. And it's just, it wasn't attractive. So I'd say if the risk reward isn't compelling, particularly with something like Coupang, now, if you don't feel the risk reward's compelling, give it time to play out. And things like that can take time. Just like here, several months later after the BigCommerce IPO, it's still effectively around or slightly below its initial, word initially went public. Certainly, you had this initial choppiness. I think I did my first post here saying, look, it's a little expensive. Then a lot of people were like, ha ha, look how wrong you are. And I'm like, okay, I'm fine being wrong, folks. It's what's important is like doing things that are comfortable for your journey, something that you can logically pencil out and sleep well. No matter what someone else shares, you need to be able to have your own convictions when you're, doing things for your own investment portfolio. So here it is. I posted, here, I think it's expensive. That was around $130 a share. I'll shrink myself a little bit more so you can see what I'm talking about here. But yeah, you're going to have choppy dynamics for the first few months. So I'd argue, if you really absolutely have to give in to fear of missing out, like go in slowly, a little bit at a time, and just recognize that first year as, lockup periods expire and more shares come to the market, it's going to be chunky in terms of that valuation, in terms of that price range. So ideally, as I always articulate, you want to think about it one company at a time, think about that risk reward. And so even now with Coupang up, 40% from, what I called out yesterday as more of a reasonable valuation. Now it's, it's very, very rich. You should always size up. Well, if it's not that compelling, maybe you hold off, or at the very most, if you absolutely feel like you have to, you start off with a teensy tiny position and you track it. So then, so here's the updated valuation based on this $49 a share price, where I haven't changed any of these other variables. The key aspect is what's their growth over the next year, what are their margins over the next year, and this is the key one for you to think about, store in your head. I'm putting 3.5 to 7% operating margin, optimized operating margin. They're not near profitability now, but think about 3.5 to 7% operating margins, optimized operating margins in the future, and the same multiple range. And you could see that at the bottom it doesn't really get to that super compelling risk reward. Now, of course, could I be wrong about this? Could this go higher or lower? Of course it can, but I like to have a logical framework from which I consider all investments. This sheet, by the way, is available to you in the description of this video. You can play around with this hypothetical valuation, think about the different inputs you want to play in with it. But overall, I look at this and I don't find upside of, let's say, 83% and downside of 56, 58% that compelling. This doesn't strike me as the risk reward of like, hey, logically this could be down 20% and up 200%. And those are the types of companies that I like to bank on, where it's like, hey, I just think that this is going to win, and the risk reward is really asymmetric, versus something like this, which is not so much. So then, then it goes to Carl's question, Unraveled Investing Journey subscriber, where he's like, well, wait a second, if you look at a company like Pinduoduo, and in full disclosure, as I already mentioned, I own Pinduoduo stock. My cost base is around, is a lot lower. It's been an 8x return for my personal investment journey, and now it's trading at 18 times sales, versus looking at Coupang, where, you see that, the revenue potential of, let's say, 16, 17, 18 billion versus an $84 billion current valuation. So 4 or 5 times sales versus, price to sales multiple of several e-commerce platforms of high teens or mid-teens. Like, that's a huge delta, a huge difference. Maybe I'm missing something with Pinduoduo or PDD stock versus Coupang. Could this mean a huge opportunity for Coupang? And that's this key point that I wanted to get into, which is that you need to understand the business models when you're thinking about the risk reward for each company. For example, with Pinduoduo, it's a marketplace. Now, they do have some elements, some catchy elements, some sort of gamified elements that attract users that have resulted in their fast growth. But it's a marketplace where merchants are bidding on certain keywords to sort of show their listings when a consumer goes onto their marketplace. And that revenue, a ad-driven revenue, effectively ad-driven, where you're effectively bidding on keywords, that's going to be much higher gross margin than, let's say, if you're selling goods yourself. And so you can see here with Pinduoduo, and this is the framework to think about, is that's a third-party marketplace, or a 3P marketplace, or a 3P platform, where they have very high gross margins, or gross profitability, where you could see their gross profit in the third quarter 2020 was around 10.9 billion renminbi, which is on 14.2 billion in sales. So that's 77% gross margin. So really high gross margins mean that if your business gets to scale and you don't need to spend as much on, let's say, on sales and marketing in the future, then maybe you can get really high operating margins in the future. And that gets back to that point that I was asking you to think about and lock in your head a minute or two ago, where I was saying, hey, look at these optimized margins of 3.5 to 7% for Coupang. Why am I using a low single digit, mid single digit optimized operating margin versus Pinduoduo, where the optimized margins might be much higher? And the reason why is that for Coupang, as you can see with this data here, their gross margins are razor thin. In the most recent period, it was only 16, 17%. And that's because it's a different business model. So for each company, you need to size up the different business models. E-commerce in one place is not the same as another. So here it is with Coupang, what they're doing is they're predominantly, for the vast majority, it's selling their own goods. Now they do have their, this net other revenue, which is higher margin, some advertising revenue, but a core part is their retail sales, which is going to be very tough, optimized margins longer term. So that's understanding what that can be. And at the end of the day, you're not going to get to 80% gross margins if you're selling your own good. If you are an everyday low price business model, I wrote EDLP here, or everyday low price business model, you're never going to get to those super high margins. Therefore, your operating margins will be razor thin at best. That's the optimized scenario. So that's the reason why it's critical to think. So if your gross margin, let's say for Pinduoduo or PDD stock, is 4 to 5x and they have similar growth profile to Coupang, which has similar growth, but it trades at a fraction in terms of the valuation. Well, that's warranted because your gross margin is 4 or 5x, so therefore your valuation, if all else being equal, your valuation should also have that sort of differential. So seeing, let's say 4 or 5 times for Coupang, which has low teens margins, gross margins, versus Pinduoduo, which has something like nearly 80% gross margins, which should over time potentially drop down into much higher optimized margins, could be similarly 4 to 5x what you would expect the optimized margins for Coupang to be. And that's the key point for investors to consider as they look at these types of companies. You can't just say, oh, e-commerce trades at teens multiples. You always need to think about what's the appropriate multiple based on the business model, based on what you think their margins could look at longer term. And that's ultimately what drove me to Pinduoduo in the first place. I said, wow, an advertising business model that trades at a single digit price to sales, that doesn't make as much sense. You could see, a few years ago, it was trading at a mid single digit price to sales. And I was saying, wow, this business is growing real quick and it has this type of margin profile. Didn't make as much sense. And that's why, I did a similar type of valuation comparison. And I got to, hey, this could be a home run. This could be much higher. And it has worked out. It's been 8x since I personally bought it. And if you want to follow my personal journey, as I'm looking for these types of potential multi-baggers each month, go to unrivaledinvesting.com, click on Journey, where each month I call out at least one potential multi-bagger that I find to be interesting. It's also just tracking my own personal investment journey, where I'm sharing, sharing each month, what are the companies that I'm thinking about buying for my portfolio? Maybe I start a teaser position. Maybe I buy more of something that sells off. What do I sell? Maybe I don't like the risk reward anymore. Now look, this isn't day trading. This is a journey where I'm thinking in long-term time horizons. So if you're expecting, daily or hourly updates of what I'm doing, I'm not looking to do that. What I am looking to do is share what I view is a multi-year, potentially multi-decade journey as I'm thinking about where do I want to be in the future, and what potentially unrivaled companies do I want to own over that time frame where I can watch them grow and compound and take share. And there's also an educational series that I post. You can see all the content, all the exclusive content in the link in the description of this video. It says exclusive catalog of content. You click on that and you can see it'll bring you to a sheet, and there's a tab for each of these different sections, like portfolio updates, potential multi-baggers, each of these different things. And at the end of the day, just finding one potential multi-bagger can change your life journey. So if you're interested in following my journey, try to find these potential multi-baggers, go to unrivaledinvesting.com. And if you enjoyed this subsequent follow-on on Coupang stock, please make a point of subscribing. If you're already a subscriber, I do appreciate that thumbs up, and thank you so much for watching.